Welcome to This Week in Money, the source for market opinions. Here is Phil Mackesy.
David Morgan is our guest. You'll find him at silver-investor.com. It's the home of the Morgan Report. Hey, David, it's good to have you back on This Week in Money.
Phil, it's great to be back with you.
Hey, before we talk about the Vancouver Resource Investment Conference and what was going on there, I want to talk about the Morgan Report. There's a rumor I've heard that it's free.
Well, it isn't and it is, and of course that's a misstatement, but basically it's a paid service. There's 3 levels of service, but if you want to try it out and you're on our free list, in other words, if you just go to the website, silver-investor.com, and sign up for the free report, which is free forever, one time during that process of the first few weeks that you're on there, we do an offering. And that offering is to try the full paid membership for free for 30 days. And a great percentage of people that take us up on an offering actually stick with us. Now, a lot of people, of course, bypass it. It's your choice. But it's a way to get it for free, yes.
Place to go, silver-investor.com. Now, let's talk about the show in Vancouver this weekend, the World Resource Investment Conference. You were talking about silver, the move ahead.
Absolutely. You know, I try to point out, and I think I made a strong case, that one, the bull market isn't over. Any metric that you want to use using gold or silver or both shows that we're far from a top. I went to the average between the Dow gold ratio, the silver Dow ratio, what markets have done in the past, how it compares to bubbles in the past. But more importantly, I pointed out in the last bull market, especially in silver, gold did it similar, is that the big run was in the last 12 months. Actually, it was even less than that. It was just in a few months. And the old adage that I've been kind of harping on, that 90% of the move comes in the last 10% of the time, I did the simple arithmetic, and basically 87.5% of the move came in the last 7% of the time. Now, that doesn't mean that this next market is going to repeat identically. What it does suggest strongly is that silver and gold are going to act like all markets do when they get overbought and are overvalued. And that means that they're going to be at a very rapid move up and up and up, and even the bulls are going to say, oh my goodness, it can't go up 27 days in a row, and here's day 28 and it's up again. So I think that's what we're going to see, certainly not in 2013, probably not in 2014. But the move ahead, I think, is going to be dramatic. It's going to be impressive. And now is the time to buy, and if it's one thing I've learned with 40 years experience investing, and that is that good investments are not bought at bottoms. People do not buy bottoms. I had the website up. Silver was the lowest inflation-adjusted price it had been in history, and I couldn't get anybody interested in my work.
Wow.
And I have to add on to that, Phil, sorry, but the only ones that really seemed to get it were like Warren Buffett. He bought 129.7 million ounces of silver. Bill Gates, through Bill Fleckenstein's motivation, bought a lot of Pan American silver, and George Soros started Apex Silver Mines. So the billionaires, not the millionaires, the billionaires are buying silver at the bottom. I was buying silver at the bottom, but boy, it was a hard time. So here we are again when people really should be interested in this sector because it's low and the stock market's going higher and higher, where you should be contrarian, but, it's not happening.
I know this is just a snapshot, David. The silver down 28% this year. Obviously a good time to buy. Is there a silver lining here for us?
Well, I think there is. I mean, unless I'm missing something, the fundamentals, I think, are stronger than ever. I mean, basically, my premise, and I started off my lecture with this, isn't that, silver is a cure-all for every ill in the financial system, but it certainly helps. Secondly, that the idea that the normalcy bias, I call it, that things are always going to be like they are today, tomorrow, is wrong in my view. These fiat currencies have always had problems, and we're seeing these problems over and over again, but people seem to ignore it. They see it right now. I mean, they're tired of the story, I think. It's like, oh, you guys have been saying that, and nothing's happened, and, I kind of give up, like, you're crying wolf. I don't see it. It's not going to happen. I should, get out of silver, gold, get out of my mining shares, whatever. Mm-hmm. Look at the stock market. So they're kind of easily distracted. And I'm not saying everyone, but it's kind of like I said, it is the idea that you should be buying when everyone else is selling, and that's right now.
Are we going to see more volatility over the summer in gold and silver markets, Dave?
I think we're going to get a relief rally into late June, probably third week of June, and I think it'll bring a little bit of life to the market for a little while. And then I believe that we're going to see it drift lower. I don't think the ultimate lows are in, but I think we're close. I think it's going to be summer doldrums again. Okay. Barring, of course, that black swan, and no one can predict that.
David Morgan from silver-investor.com, our guest here on This Week in Money. One of the things you and I were talking about off the air, silver, not just a precious metal, it is also an industrial metal. You were talking about some new uses for silver.
Well, going over some old ones. First of all, that a lot of people don't know, this is really a silver fan, is that silver's been used in clothing, textile industry more and more and more, especially in athletic clothing. And this is continuing to go. Patagonia, if I'm pronouncing that right, it's Patagonia, is offering odor-resistant outerwear. This is another company that's coming on board. And also what you're going to see, and you can get it, they're kind of rare right now, is where you buy a sweater or some outer garment, and it has a silver threading, and you can actually adjust the temperature on it. So let's say you want to dress light but stay warm up in Canada during the winter. Yeah. And you could have a little rheostat on it, kind of like crank it up to whatever temperature you want when you're walking between buildings, and then when you sit down in the theater, you can turn it down. I think it's kind of incredible, but this is the idea we're going to in the industrial market with silver. It's one of many things. I mean, silver is the most used commodity for applications outside of oil. Oil, of course, has tons of applications, much more than silver, but silver, as far as the metals are concerned, is used the most in all kinds of diverse products.
David Morgan, our guest here on This Week in Money, over at goldseek.com. They're talking about the difference between physical and paper markets. Silver and gold, the imploding bubble is the title of the piece, and they're talking about the big demand for physical gold and silver.
You know, it's been one of the premises, again, of me and many others that, you know, these are two separate markets. You've got the fiat fiction and the physical reality. And someday this is going to, you know, be a really big problem for metals investors that don't understand what's going on. Right now, really on the gold side more than on the silver side, there's all kinds of anecdotal evidence that some of these physical gold purchases that have been made are not being honored. Swiss banks claiming that they're not going to get the metal. They're going to have to settle in cash. Dutch bank did that formally. That one can be proven. That's on the Internet. Some of these funds that claim that they're not getting it. Funds that I know for a fact, because I deal with some of them, have moved out of the ETF, sold their paper ETF gold, and bought physical gold. China and Russia continue to buy physical gold. So there is a discrepancy between, again, the physical reality and the fiat fiction or the paper fiction. And this is going to manifest. The last one is the COMEX. The amount of gold physically on the COMEX is ridiculously small relative to the size of the gold market. And that's being drained off rather rapidly. And maybe that's the choke point. I'm not sure. But somewhere along the line, someone somewhere is going to continue to not get paid in physical that should be, and something's going to happen. It is happening. There's lots of cases, but exactly how it will manifest to where everyone gets it. In other words, even the New York Times has to report it, and the mainstream press has to acknowledge it in some fashion. And I don't know when that's going to take place, but it will. And then you're going to see two prices. You're going to see the real price and the paper price, and the paper price may just kind of go away, meaning that the COMEX or some of these exchanges are going to have to admit reality. I mean, this thing in Hong Kong with this exchange that basically looks at, from where I stand right now at the end of May 2013, looks like it was a fraud. I don't have all the information. I don't like to use that term lightly. But this thing is being investigated, and it doesn't look very good. And a lot of people, myself included, looking back a few months prior, thought, you know, this exchange was on the up and up. Yeah. So lots going on there, Phil, that, you know, it almost hits the conspiracy theory guys. But the facts speak for themselves. And the facts are physical gold is hard to obtain. In some cases, they're not getting what they should.
One of the most interesting things to watch, Dave, is coin sales. They're always a good indicator. Here's a couple of interesting numbers here. Silver Eagle sales at the U.S. Mint just crossing the 20 million mark. U.S. Mint running out of $5 American Eagle gold coins a month ago. So there's a huge demand here.
Absolutely true. Well said and good insight. if you go back just maybe 5-6 years, the average sale of Silver Eagles was about 10 million a year.
Wow.
And now we're at 20 million, and we're about halfway through the year. And it's the little guy, I think, that's going to take down the silver market. We just spent some time speaking about the gold market, but the silver market is mostly smaller investors. Not all, but many. And we're going to see, I think, those, coin stackers or silver stackers as referred to, again, the physical reality will take over the paper fiction. And that day of reckoning is coming as well. And which one's going to happen first, gold or silver, I'm not sure. It certainly looks as if it's going to be gold right now from where I stand. But either one could take place. And again, no one can really forecast when, but we're getting close.
We also have a mint up here in Canada, the Royal Canadian Mint, David, and they have a new silver coin. You were telling me 1.5 ounce silver coin?
Absolutely, Phil. It's awesome. To hand it to the Canadians again. The Royal Canadian Mint produces first and currently the only 1 1/2 ounce silver bullion coin. It's the 2013 Silver Polar Bear. It says $8 on the front of it, which has very little bearing to the physical price. It's 4/9 fine, which Canadians always do, which I admire. You're the only ones that do 4/9 coins. And, of course, it's got the Queen on the back. I don't leave my comment aside on that. Polar Bear on the front. Coin sells for about a 30% premium, and it's available for most of your bullion dealers. So it's kind of a cool-looking coin. I am not a big coin collector type guy, but on these situations where you have these bullion coins that are unique like this, I think it's worth picking a few up because you never know when the series will be stopped or the limited mintage, and they could get a pretty good premium on them over time.
Dave, let's talk about gold for a second. It's below 1,400, down 18% so far this year. Sell-off, I guess, probably is healthy.
So I think it is healthy. I mean, all these bull markets, the function of bull market is to shake off as many people as possible. Boy, judging from the enthusiasm at the World Resource Investment Conference, move is pretty low. I think that bull market's doing its job. It doesn't mean it's over, but it does mean that we're going to have to climb that wall of worry. I think long-term investors are getting in now are going to be very happy.
What about the CFTC data? They're always interesting to look at. They're showing the net long position of non-commercials, the smallest since November 2008. That's interesting.
Very interesting. I addressed it in this month's issue of the Morgan Report. That'll be coming out here the 1st of June. And it is a very strong indicator. Every time I've seen this in the past, basically we get a pretty good move up. That's one of the many things I'm looking at to forecast this brief, strong rally over the next few weeks in the gold and silver markets. Again, time will tell if I'm right or wrong, but it looks as if we're ready. We're ready for a springboard up. Again, I don't think it's going to just blast up and away we go. I think it's going to be a nice enough move that people are going to be happy, especially if they can trade it. But I think, again, we're going to see it fall back off and hit probably the August low.
You'll find David Morgan at silver-investor.com. It's home of the Morgan Report. Follow Dave's Twitter feed at SilverGuru22. Hey, David, it's always good to talk to you. Thanks for your time, sir.
Thank you, Phil. Thanks.